A weak currency is one that's inflating rapidly, that's collapsing. Weak currencies make sense. If you lived in Venezuela, you would use the bolivar for about a day. You would hold, a peso or something for a month. You might hold the dollar for a year, but you would want to hold Bitcoin for a decade.
Saylor talks about the biggest wealth destruction in history and warns that relying on conventional saving methods would wipe away wealth sooner than one would expect. If you're given an option to invest in either Bitcoin or blockchain technology in general, or put your trust in the government's currency and believe in that it will help you secure your future, which one would you choose? Michael Saylor made an interesting argument on the same in this interview.
Because if I told you everything you do the rest of your life is going to be worth nothing, or you could switch your savings technology and everything you did in the rest of your life would be worth a lot and your children could live a comfortable life, which of the two strategies would you choose?
If you think about it, witnessing the history of fiat money over many decades, its value is slowly and steadily fading. If you saved $100 5 years back, that money you saved is now worth only $40 adjusted to inflation. Let me give you another example. The national average cost of a movie ticket in 2005 was $6.41, but by 2019 it was $9.16. That's the work of inflation. The price of a movie ticket, a house, or a semester in college tends to rise over time, sometimes quickly and at other times slowly. The fact is very relevant for your personal savings plan. Let's say you have $100 in a savings account that pays 1% interest rate. After a year, you'll have $101 in your account. But if the rate of inflation is running at 2%, you would need $102 to have the same buying power that you started with. You've gained $1, but you lost buying power. Anytime your savings don't grow at the same rate as inflation, you will effectively lose money. If you have retired and are living on your savings, you can't keep up the same standard of living if inflation cuts into your purchasing power with every passing year. That is especially true in the US, where medical costs tend to rise at a higher rate than many other expenses.
If you're holding a currency like the dollar, and the dollar is inflating at 15% a year, then that means you lose 15% of your wealth every year, which means that over about 4 years, 4.5 years, you lose half of your wealth. Over the course of 10 years, you lose 80% of your wealth. So it doesn't make a good savings account. It makes a good checking account. It's probably good to have 1 or 2 months of expenses in the dollar. But if you're holding a year to 10 years worth of expenses in the dollar, then in a decade, you're going to be much poorer. If you're holding the peso and the peso is losing 40 to 50% of its value a year, it's even worse, right? Over the course of 10 years, you lose 95% of your wealth. So a weak currency is one that's inflating rapidly, that's collapsing. Weak currencies make sense. If you lived in Venezuela, you would use the bolivar for about a day. You would hold, a peso or something for a month. You might hold the dollar for a year, but you would want to hold Bitcoin for a decade. So they're all different strength currencies. But let's say you have $1 billion on your treasury as a company or a country. If you store that money in US sovereign debt and you're holding $1 billion of T-bills, and if the US currency is inflating at 18% a year, that means every 4 years you lose half your money. Okay, so another way to say it is it's costing you $180 million a year, or it's costing your citizens $180 million a year to use that as your reserve asset. And it will cost them $500 million in 4 years. And it will cost them $750 million in the 10 year or in the 8 years. So it's very expensive to use a depreciating currency as a reserve asset, right? It's so expensive that in essence, it impoverishes you. For example, my company had $500 million of cash and we were generating $100 million in cash flow a year. Well, when the inflation rate gets to 15%, then you're losing $75 million in wealth on your treasury in the same year that you're generating $100 million in cash flow. If you have to pay tax on that cash flow, you have $75 million after tax and you have a $75 million loss. So that means that a profitable company working as hard as they can, doing 100,000 things right every year, makes no progress. When the inflation rate doubles to 30% or 25%, you're actually getting poorer working as hard as you can. So another way to say this is the road to serfdom is working exponentially harder for a currency growing exponentially weaker. You want to take the extreme. Imagine yourself working as hard as you can in Argentina while the currency is losing 40% of its value a year. What you can see is it's utterly hopeless and impossible no matter how hard you work. You have to work 40% harder per year to stay the same, right? Impossible.
In 1913, the Federal Reserve Act granted Federal Reserve banks the ability to manage the money supply. A dollar could buy 30 Hershey's chocolate bars. As more dollars came into circulation, average prices of goods and services increased, while the purchasing power of the dollar fell. By 1929, the value of the Consumer Price Index, CPI, was 73% higher than in 1913, but a dollar was now only enough for 10 rolls of toilet paper. Saylor said it's better for a country or a corporation that is doing $100 billion a year to change its focus to Bitcoin rather than the US dollar as their treasury asset. This would help them to save or even earn $20 billion a year, which they would lose otherwise if they decide to stay in the conventional US currency ecosystem.
The reason that a country or a company would want to switch to a Bitcoin standard from the US dollar standard for your treasury asset is because instead of losing $20 billion a year, they would be accreting or making $20 billion a year because they picked the right asset to store their economic wealth in.
Saylor also talks about how China uses debt incurred in US dollars as a strategy to keep their export prices lower and maintain economic stability. As of October 2021, China owns $1.065 trillion, or about 3.68% of the $28.9 trillion US national debt, which is more than any other foreign country except Japan. China invests heavily in US Treasury bonds to keep its export prices lower. China chooses U.S. treasuries to invest in versus real estate, stocks, and other countries' debt because of their safety and stability.
You take a country like China. If China's holding $1 trillion worth of U.S. debt and the U.S. inflates the money supply by 20%, the Chinese people pay $200 billion for that privilege. In fact, they're probably holding 3x that much debt. So the US is in essence exporting inflation that costs the Chinese $600 billion a year, every year. It's a pretty profound idea. Now you could call it security, like maybe the US's greatest export is security. People pay us hundreds of billions of dollars a year for the privilege of using our currency as a reserve asset and using our banking system. But if you're a country and your citizens are working as hard as they can, like maybe I'm basically shipping oil. If I ship $100 billion of oil and I export it every year, but I lose $100 billion by holding the US debt, I'm in essence selling my oil for nothing, impoverishing myself. And so why would you switch? Because if I told you everything you do the rest of your life is going to be worth nothing, or you could switch your savings technology and everything you did in the rest of your life would be worth a lot and your children could live a comfortable life, which of the two strategies would you choose?
As we come to the end of the video, inflation tends to cut into a consumer's purchasing power over time. The effects of the rise in money supply were amplified by the financial crisis of 2008, and more recently by the COVID-19 pandemic. In fact, around 20% of all US dollars in the money supply, $3.4 trillion, were created in 2020 alone. How will the purchasing power of the dollar evolve going forward? And will the US dollar retain its position as the reserve currency? Or the rise of Bitcoin and other cryptocurrencies would become the gold standard reserve asset? Let us know your thoughts in the comments below. For more insightful videos about crypto and the stock market, be sure to subscribe to our channel and hit the like button if you feel the video is useful. Until next time, take care.